Now, obviously, we don't know. And it's not, you think a company ticks all the boxes and they're going to get taken over, but they might never will. But, if we follow this process and we build a portfolio of these companies, and again, we're not buying companies to get taken out. We're buying them because the businesses are really good. They're growing, they're profitable. We think they're cheap. And if they stay cheap long enough, they usually tend to get taken over. So who could be next? Well, we think these three companies have a good chance of being taken over in the next 6 to 12 months. The first one is EML Payments. Now, I'm not going to talk about this one too much because I'm going to talk about it as a core holding in the next slide. But we think EML is now a very high likelihood of being taken over. It's an established global payments business, super profitable. It had a refreshed board and a management-led turnaround, which resolved basically all the regulatory issues of the past. They invested all non-core loss-making divisions. It's got a net cash balance sheet. And it's, as of yesterday, they had their AGM and new strategy day, and they basically reaffirmed guidance. So, it's got 210 million of revenue, 60 million of EBITDA. And they basically said that over the next 4 years or 3.5 years, they're going to get to close to 100 million of EBITDA, 60 million of free cash flow, which at a market cap of 300 screams extremely undervalued. Obviously, the stock has rallied since yesterday, but we still think it's a takeover target. The next one is Comms Group. Probably most people never heard of this company. They're a small sort of telco, IT managed services and global voice provider in the Asia Pacific region. What's interesting is that although it's relatively small, it's got a very strategic Asian voice network that pretty much no one else has. And so any large corporate business looking to sort of get their, whole sort of unified communication network across several countries, they can really use Comms Group, network across Asia, and they're sort of winning contracts this way. The managing director and the board own 23% of the company, so that's a big tick. And financial year 25 is a big inflection point. So, they've got 55 million of recurring revenue, and they're targeting organic growth of 5 to 10%. They're forecasting 7 million or more of EBITDA. They'll generate 3 to 4 million of free cash. They actually started paying dividends last year, and they got a good balance sheet as well. So, they've been winning some global voice deals over the last few weeks. They just announced one 3 days ago with one of the large Mag 7 companies from the NASDAQ. And what's interesting is that Telstra is exiting this market next year. And so it really creates a bit of opportunity to grab some of those Telstra customers. They use Vodafone, Tata as reseller partners. We've seen a lot of industry consolidation in the telco sector. Comms Group trading on 4 times EBITDA. We're currently seeing a takeover battle for Vonex at close to 8 times. Symbio got taken over at 8 times. And so we think that it's only a matter of time before someone like maybe Aussie Broadband makes a move on this one. And then lastly, Clearview. We've been saying it's a takeover target for the last 3 years. Eventually, we'll get it right. Obviously, it ticks all the boxes. It's got a leading sort of mid-tier life insurance business in Australia. It's probably the only independent life insurance business left. They simplified their business, got rid of all the wealth management stuff. Got a strong balance sheet, 71 cents of net assets, 91 cents of embedded value. Attractive valuation. They're still sticking to the financial year 26 aspirational target, which they're, well ahead to meet, of 7 cents EPS, 4 cents fully franked dividend. Now, they had a couple of weeks ago a bit of a downgrade for this year, and the stock got absolutely smashed, which basically saw in the first quarter of this financial year, they had some really bad claims experience of $6 million, which impacted NPAT. It is a bit of a once off. And so obviously it will hit their profit this year, but it doesn't really detract from the valuation of the business, which is really the embedded value of all the future cash flow of the policies that they have. So, we think that, it's on a P of 5. at some point, I think someone is going to make a bid for them. And, we think that with the valuation where it is, it's probably more likely that there will be an opportunistic bid, and, most likely that everyone will accept it considering the share price performance of this one. So I guess these are stocks to watch, and they could be takeover targets, but they still tick all the fundamental sort of things that we're looking for in a company.